Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Show, Friday the 13th edition. I don't have anything scary planned. Maybe Mike does by the time we get over to him. But we got three topics for you today. First of all, I'm going to talk about the green in the market, even though neither of us are really repping a green. Maybe that's an olive drab that Mike has on, greenish. But normally we have our green on, but today, you know what? The market's taking care of that for us. So the all three indices are higher. That's gonna be the first topic. I will talk about that, and I'm gonna actually show you the charts for all three on where they are in relation to their all-time highs. Could we possibly be hitting all-time highs going into this first rate cut Wednesday? Yeah, could be. We shall see. Now I'm going to turn over to Mike. He's going to talk about a far more exciting topic, just kidding, but about Boeing. You may have heard that name. Really nothing good happening in the world of Boeing in the news recently. They've got some worker strikes. Mike will talk about that. And then next, to close things out, Mike will talk about some China news where they're changing some retirement ages. I didn't get the pre-read. I don't know if it's going up. Maybe up. I don't know. It's going down. I don't know. So it's going up. So there's your teaser to listen in. It's going up. You're going to retire older in China. But that's what we've got for you today. This is a financial education presentation, so you have to do your own due diligence before you act upon anything in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are Mike and mine alone. Let's take a look at the markets for today. Here is your CNBC front page, if you will. Dow up 1%, S&P up 2/3, and NASDAQ up 2/3. So let's look. Are they at new highs? Well, we're getting there. Oh my goodness. When you take a look at that, we are really within that have to be 1% of a new high there. So let's it's the 1 year. Let's go year to date, just to kind of keep everything. So really, banner year. Yes, we had that big dip, if you will. We've had a few big dips, but the back in here that we had the week where it basically sold off. This whole week's been basically straight up. We have the highly anticipated and almost guaranteed at this point quarter point rate cut, maybe 50 basis points coming up Wednesday. We'll find out. But yeah, I think that this is going to be one of those where everybody's excited, to buy the rumor, sell the news kind of thing. So I think when the actual rate cut hits, I don't expect the market to go screaming higher next week. I think that's all kind of happening now. So temper your enthusiasm, right? But when you really look at, how's the market performed this year? I mean, it's been, a pretty good ride so far. So don't be disappointed if it doesn't continue on forever. Here's the S&P, similar but a little bit different, right? Because it doesn't have quite the big valleys that it had, but we've got kind of a triple top forming there in an S&P. I'm not a technical analyst by trade. I kind of chuckle at that sometimes, but it's a thing. I can't deny that it's a thing. So if there's a bunch of people out there that think, well, it's a triple top, so therefore that's going to mark the top in the market, well, that adds some selling pressure right there, right? So I don't know. So you've got the new highs get new highs crowd. Yep, that generally happens. But then you also have the technical folks that may tell you that it's not really going to go much higher from here. And then lastly, let's look at the NASDAQ again. Most with our more aggressive portfolios, we're a little more correlated to the NASDAQ, and we've got a ways to go. Right, tech got hit pretty hard, and that's the nature of aggressive investing. Is you're on the coolest roller coaster at the amusement park. So sometimes you just have to stay strapped in. But do I see tech going higher? Yes, I do. So what do I think? On personal opinion here is, yeah, I think the market cools a little bit, but you're going to see, the handful of tech names, whether it's the Mag 7 that it's always been or new names emerge in there. But basically in the field of technology, you're going to see some names run. Personally, I think NVIDIA is still significantly underpriced for where it's going. So you may have seen some of that show up in your portfolio. So I will stop talking about the markets. Mike, you can lead starting with market stuff if you want, or you can hop right into Boeing.
I am going to go right into Boeing. You covered the key things in the market, and it's amazing how much a week changes things. At the end of last week, we had selling day after day after day, and then this week up, and up. I mean, there was a dip on Wednesday, but it recovered and actually went up. So, wow, now it's all green. So like that. And usually I'm not a bad news kind of person, but on this article, how can I not be? Boeing votes on a strike, and was it a borderline vote where they just barely decided to strike? 96% vote to reject the contract, essentially authorizing the strike. 96%. Well, I mean, I guess in the idea of unity, that's pretty united. And as I read this, and Boeing is a stock that I know that in the COVID dip, that was a great purchase. I can't remember what price, Steve, what we moved in on it at, but right. It was like an all-time low, and it recovered, but then Boeing, quality problems, issues, some workers retiring due to COVID, taking advantage of their time. So new workers came on, learning new things. Can't have a lot of quality problems with airlines because it's a little more serious than when your phone breaks. Yep. And change of CEOs. So, I mean, if there's bad news, it's in Boeing. And now, one thing I wanted to pull out of this, and this is something that I'm going to go to the next article that I pulled up on this, is, where is it at, about what they're asking for. Whoops, I don't know why I got that. Go back here. Well, anyways, what they're asking for is the union initially asked for a 40% pay increase, and then they've come down to 25%. And as I thought about those numbers, 25% pay, 40%, initially you're just like, wow, that's a ton. It's not like they're getting 25% year over year over year. And this is where inflation rears its head in an ugly way. So in the past, if you're I'm going to say a non-union worker, you can go get another job in another company and basically get a pay raise, let's hope, as you switch. And so inflation goes up, you take advantage of that. And I've come from General Motors where there are unions there, and unions, you're typically in it for life. And the union negotiates the pay increase. It's not like, Steve, you did a great job, we're giving you 5%, and Bob, you didn't do so good, we're only giving you 2%. It doesn't work like that. So the workers are tied to that union. But when you think about inflation and what's happened, 9% in 2022 and 3%, a 25% pay increase doesn't sound unreasonable. And not every year, but a 25% one-time increase to unions, that sounds a reasonable jump based on inflation. And I know that cost of living is calculated in there as well. But here's the danger. So they go strike, it's probably a valid reason. Obviously, 96% of them are in alignment on it. That's pretty substantial. It's not borderline. Boeing's in trouble. They're in big trouble. I mean, as far as that takes out their best-selling 737 MAX, which also has a headline here about the door panel blowing off of it. That makes me a little nervous. But when we look at the stock, trading near the 52-week low, let's back it up to like a 5-year graph. That's ugly. I mean, even if you bought it at the 100 price point back in the COVID and you're like, yeah, I got it $100 a share. If you held it, yeah, you're definitely up, but it's an ugly graph for the last 5 years. And then you look at the all graph, take it back and like, I love it through 2019 and it's been awful since then. And, you buy a great company and it's over half off. So I just see Boeing's in trouble. Now, there's also an idea that says, when's the best time to buy a stock? When it's absolutely on sale. And if there's something wrong in a company, it seems like it's wrong in Boeing. Do I have the courage to go out and buy this in my own portfolio? No, I don't. Not right now. I mean, I'd have to see some indication. I'd have to have some indications of improvement. So, I mean, is this company going away? Is it going bankrupt? I don't believe so. But is it in trouble? Yes. And we'll see. There's no telling how low it can go. So that's Boeing. Sorry if you work for Boeing and you're hearing this. So the other side, let me take my other, and hey, maybe this is bad news for Chinese people. I don't know. I don't like reporting bad news, but China's raising their retirement age. Hopefully I'm not getting on saying the United States is raising ours, for those of you that are nearing that. But China is raising, and of course, when I saw this, I was like, what? I didn't know what the retirement age was before. Right. So what are they raising it by? So they have a 15-year plan, that's smart, grandfather clause it in, to raise the retirement age by 3 years for men to be 63 years old. So, that's pretty good. It was only 60 before, now it's 63, or going to be 63. And then there was an interesting part of this that I'd never thought of before, but they treat people in blue collar factories versus different than people that are in white collar, at least for women. So women that are in factories get to retire at 55, going up from 50. And if you're in a white collar job, it's 58. And I never thought about doing a retirement plan for a country based on the type of job. It does seem a reasonable idea, but very, very hard to implement, because what happens if you start out in the factory and then you get a job? You know, what happens if you're in the white collar job, you switch to, so that being said, most people listening to this are not tied to this Chinese retirement. So here's your bonus slide. I'm going to show you the retirement age around the world very quickly. I'm going to scroll through this. I found this graph on the visualcapitalist.com. And you're going to see a trend that most retirements, first one's Asia, it bounces all over the place, and you see China in there. But in Europe, look how consistent that is. It's in the 63 to 66 age range. So you can see, now if you go to the country of Turkey, it looks like they have a way you can retire at age 52. And then, of course, you see your United States, where they listed as 65, 66. So China is in a situation with their one-child policy where, if you remember, they only allowed you to have, or they only really wanted you to have one kid back when. So now their workforce is aging, and they don't have as many young people. They need to raise their retirement age because they need to keep their workers. Not so much that the government's trying to avoid paying benefits, and I don't even know what those are. But when I look at this, I say that worldwide, 65 to 67 seems a reasonable government-picked retirement age where you're going to pay benefits. But of course, with Ankerstar Wealth or your savings, really, 401ks, Roth IRAs, things like that, you get the option to retire early, which is nice. So anyways, let me see if there's anything interesting else to call in this graph. I don't know. Steve, you see any other countries in here that pique your interest? I don't see anybody saying, like 70, Indonesia, 69. I don't know. So.
Yeah. I wondered what it was going to look like, even for the U.S. It's weird, 65, 66. It's like, okay, well, now you have full retirement age at 67, at least for our year group. It's kind of, I was wondering what they were going to say the number was for the U.S., because you could say 62 to 70. That's kind of the benefits window where you can choose to retire in there. So. No, that's pretty interesting. And with the Boeing thing, when you said, folks will ask, is it beaten up enough to buy it? And I was reminded of Dave Chappelle story when he got a phone call from Dancing with the Stars, and his answer was, not yet. Alluding to his career hadn't quite sunk enough yet to be able to say yes to Dancing with the Stars. I would put Boeing in that same category. Obviously, Boeing's not going anywhere. It'll be around I would anticipate, with any two-horse race and airplane makers, it's going to be around for a long time, right? Because we kind of can't afford to lose it. But yeah, I would let the pain, I would let it bleed out a little more.
Yeah, because that's the thing is, if you think you're buying it at the bottom, if you think you're buying at the bottom now, and you're like, okay, I'm going to put in, this is dangerous. Can I stomach another 10% loss, another 20% loss? It was at 100 back in COVID, and when the world was never going to fly again. I'm sure 100's a floor. If it hit 100, I'd probably be like, that might be a good time. But it's at 160, so are you going to check out, lock in your losses if you buy into it?
Well, that's what I ask folks too, is if they're like, they want a stock and I'm advising against it. They're like, hey, it's your money. I'm just advising, like, I would not buy in here. I go, but if you have to have it, how would you feel if you woke up tomorrow and it was cut in half? Would you be like, yes, I can now buy more. I have that much conviction? Or would you take a 50-cent loss and go sit in the closet the rest of the day because you just got owned by the stock market? So yeah, good stuff. All right. Well, that's what we've got for you today. Again, Green Friday. It is Friday the 13th. So obviously we'll be staring to make sure this green holds through the rest of the day. With that, you guys be safe out there, and we will see you back from California on Monday. Mike and I will be at a conference out there, so we'll find some fun location, probably midday, to record from Huntington Beach, California at the Future Proof Conference. So with that, we'll let you guys go, and we will talk to you on Monday. Bye.